G'day folks, welcome back to another update, and today we're looking at ZIP on the Australian Stock Exchange one more time. I know a few of you guys have been interested, so it's about time we did a review. So before we get any further, make sure you hit that like and subscribe button to support the channel. In terms of the analysis or the outlook, as of today, February 15, ZIP has demonstrated significant financial growth, reporting a 28% increase in revenue to 868 million and a 14% rise in transaction volumes to 10.1 billion for the fiscal year to 2024. The company's market capitalisation stands at approximately 2.96 billion with an enterprise value of 5.26 billion. Despite these gains, ZIP's financial positions exhibit certain vulnerabilities, including a high trailing PE ratio of 810 and an enterprise value to sales ratio of 6.06, indicating potential overvaluation concerns. Notably, co-founder Larry Diamond resigned in December 2024, selling 30 million of his shares, which may influence investor sentiment. Overall, while ZIP shows robust revenue growth, its elevated valuation metrics and recent leadership changes warrant cautious consideration. Excuse me. Rewards. Earnings are forecast to grow 52% per year. Became profitable this year. Analysts in good agreement that stock price will rise by 49%. Again, that's their view. Risk analysis. Interest payments are not well covered by earnings. Shareholders have been diluted in the past year and significant insider selling over the past 3 months. So as always, look at the long-term trends first. We've got the monthly, the weekly and the daily. On the monthly, it's actually broken. Has been in a bullish run now since February 2024, and since around December last year, 2024, it's actually been declining, moving back towards the moving averages. So interesting to note, the price is retraced back to this level. And if we do a Fibonacci on, this is the monthly chart, you can see there it's actually just touched the 23% retrace of that Fibonacci range. So interesting to know if that was actually a divergence on the CCI, but we can't see anything on the monthly CCI chart. On the weekly, we did have this nice big bullish divergence, very long-term one since around middle of 2022 versus lower lows on the price, and that actually rebounded. And again, similar to what I just said, that's actually a Fibonacci retracement hitting that 23%, which is our minimum target range of a retrace, and it just looks like it just fell short. So if we drew that correctly, that was 362.4, and the high there was 356. So it just fell short of that 23% retrace on the weekly and monthly. But since then, it's actually broken down below the moving averages of both the price and the CCI 150, giving us a bearish outlook on the weekly. And on the daily, again, we had another bearish divergence here, and these are independent from each other on the different time frames. And we drew there a little initial 23% retrace. It hit that quite easily. It bounced, came close to hitting that resistance again, but it's fallen further since. So again, just be mindful. Looks like it's going to drop a lot further. So we can't really tell how far it's going to go. But at the moment, if I was to draw a Fibonacci from that high to that low, that's actually just short of the 50% level. It's just around the 50% level, stabilised there. If that falls below the 61%, we're going to see further declines closer to this support level. Now, if we go to the intraday chart, again, we look at the daily as a reference. So if you're shorting this, you only take short positions on the 1 hour in this case, in the direction of the daily, the higher time frame. On the 1 hour as well, we did have this bearish divergence back here, broke down. And if we drew a Fibonacci to that level, it fell, looks like it fell to the below the 61%, bounced out of that, and then retraced a lot further down. So it went way below, almost to 161% retrace level of that level. We had another bearish divergence here that actually broke down. Didn't quite, actually would have, if we drew that was retraced to that level. So it didn't quite hit the target there. But at the moment, it's actually giving us a bit of a bounce. We've got a slight bullish divergence to that level. So from there to there versus lower lows on the price, higher lows on the CCI. And we expect it to hit this range, and that is the 23-38% retrace level. That's where we expect it to go in the short term. Of course, it could hit that level and then bounce back to the downside, or it could actually break through. We don't really know yet. We'll take it one step at a time. But at the moment, it looks like ZIP's taking a bit of a beating. So if we go back to the long-term trends, you can see there, got a way to go before we readjust. And at the moment, the daily and the weekly are showing bearish movement. So avoid buying at the moment until we see, if you're buying on the daily, make sure that the weekly is actually broken up higher as well, especially on the CCI, to be more confident. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.